All right, well, hello. Good to see everybody. My name's Paul Martino. We have no moderator because we all talk too much. So we're just going to introduce ourselves and talk about some of the stuff we want to talk about. Real quick, I'm Paul. I run a fund called Bullpen. We even have a sports name. We actually got our name from Chad Durbin, who pitched for the Philadelphia Phillies in '08. I invest primarily in companies between seed and A in the early stage ecosystem and do a lot of sports gaming and gambling. FanDuel was one of our earliest investments when it was 7 people. So Don, how about you? Give us the quick spiel.
Absolutely. Good to be up here with you guys. My name is Don Cornwell, CEO, co-founder of Dynasty Equity, private equity firm that invests in anything in the sports ecosystem, ranging from teams and leagues to operating companies that support it. We've been around for about 3 years now, and looking forward to this conversation.
Awesome. How's everyone doing? My name's Brian Reilly. I'm co-founder and managing partner of a venture capital firm called Will Ventures. I'm based out of New York City. We came to market in 2020. Since then, we've raised hundreds of millions of dollars to invest in the intersection of sports, entertainment, and consumer, what we would refer to as cultural capital. We've been fortunate to raise capital from leading U.S. institutions, endowments, foundations. That's where most of our capital comes from. In addition to that, we've complemented that capital base with over 20 pro sports team owners, dozens of athletes and founders and operators from relevant companies in the sectors that we cover. And importantly, we're really focused on trying to build a boutique platform for this industry. And so we've tried to hire folks with backgrounds, expertise, and network in the sports, entertainment, and consumer markets. So our team comes from places like Andreessen Horowitz, the NBA, Netflix, YouTube, Lionel Messi's family office. So decades of experience operating in the sports and entertainment market. So really excited to be here today and up here alongside these guys.
Great. And real quick, Brian and I are co-investors in a bunch of things together. A lot of our thesis overlaps. So pretty excited to actually be on a panel. It's an odd thing. I don't know that we've ever actually met. Which
this is the first
funnier,
time,
right?
Great time, great way to meet.
We've literally been in, 5 companies together, and it's the first time I meet him on this panel. Just goes to show you how flat the world is now, right? It really is kind of crazy. So opening question for the panel is, I invest in a lot of things that are adjacent to sports that are kind of interesting and overlap with what Brian said, where the celebs, the athletes, et cetera, are our co-investors. I was in a lottery company called Jackpocket that DraftKings bought. I'm in another lottery company that runs the lottery in Dubai, of all places. That company's based in Kentucky, of course. And so literally, a company in Kentucky runs the lottery in Dubai, because how crazy is the world now? So what are some things you two guys are excited about that I would call sports adjacent? The stuff where your customers, your clients, the people who are buying teams are like, I need to see more of that stuff.
Sure, yeah, I could start. So I mean, to Paul's point, our whole thesis is really around like the adjacencies of sport and entertainment broadly. When you think about the macro, I think most people in this room know tens of billions of dollars have been raised to deploy into the sports and entertainment markets over the last few years. The vast majority of that is private equity and private credit. And so Paul and I, and Don in a lot of instances too, are the beneficiaries of that, because a lot of that capital is flowing not just into the big 4 sports assets, but into the entire ecosystem and into the adjacencies that are influenced by this ecosystem. And so at Will Ventures, we focus on 3 big verticals: new formats or intellectual property, the second being technology or the infrastructure around sports and entertainment, and then the third would be consumer brands. So a lot of adjacencies. On technology in particular, that's where we spend like 70 to 80% of our time thinking about where is the infrastructure around how sports, entertainment, and media is created, consumed, monetized. Where can we invest? So that includes betting and gaming companies like Paul mentioned. We're both invested. So he had previously backed Nigel Eccles when he founded FanDuel. We're co-invested in a new business called BetHog, led by the founders of FanDuel. So betting and gaming is a big area. Another big area in technology is the infrastructure of live events. So I'm invested in a business called Jump, which is a new Ticketmaster challenger. A lot of people are hoping for that. So a new sort of AI Ticketmaster challenger. some examples, we do things in youth sports. So we've invested in a new Fanatics for youth sports, led by a former Fanatics executive. Greg Olson, former NFL star, is one of the co-founders who's building the media brand. That's a business called Youth Inc., like Youth Incorporated. So those are some tech examples. And then we do a lot in consumer brands that benefit from the influence of sports and entertainment. I'm sure a lot of people here have seen sort of influencer-led brands, really popular examples, Skims, like the Kardashians brand. And so we're incubating some businesses with leading athletes and entertainers in the consumer packaged goods space, from food and bev to apparel. And we're doing a lot of work in things like health and wellness and longevity. So those gives you some ideas of where we're focusing. Don, what about you?
Yeah, so there's really two areas we spend a lot of time. One is premium content, and that can be where we do our teams and leagues. We have an investment in Liverpool FC. We're one of the small handful of firms that's been approved to invest in NFL teams. We like things where there's lots of eyeballs. We believe good things come from that. One of the themes around that is technology coming into the premium content world, and it's creating lots of opportunities and adjacencies, right? It used to be, if I was the NFL or the NBA, I had no idea who was watching. Now, because of streamers coming in, there starts to be a one-to-one relationship between team and fan, and that means the team knows a lot more about the fan. And they can create products and experiences that the fan wants. Not just blast them with ads for hats. It can say, oh, you've got a 7-year-old son who loves youth sports. Let's create something with the brand of Liverpool, the brand of the Brooklyn Nets, and get you out running around with your kid. There's lots of businesses around that. Hospitality, you mentioned Jump. That's a business that we love, that we're waiting for you to get a little bigger, and then we're gonna hopefully come in and do something. Yeah, no, we love what they're doing there, because it's all about data from those fans. The other area of TAM that we really like is anything that's experiential. There's a secular trend of people wanting to be more involved in sports. That's youth sports as a great example of that. That can be health and wellness, but it can also be just live events, right? You're seeing people go to tennis events, go to golf events. People, especially in this crazy world of AI and social media, there is a real premium on in real life experiences, and there's lots of things where sports is a great backdrop for that. And so that can range from owning a Formula One track, where they do lots of live events, to rolling up endurance races, looking at all the 5Ks, 10Ks, and marathons that are out there that are undermanaged, and doing an old school roll-up. So those are the kinds of things we look at. We are somewhat agnostic. We really just try and make returns. But we try to do it in more scaled businesses. What I love about having the two of you here is that that's the major change that's happened in sports. It used to be that there was no venture capital coming into the sports world. And it's really been the last 10 years where we've seen that capital come in, and it's creating new business models which are making it easier for people to monetize. And that's a win-win for all of us.
Yeah, and by the way, I can tell you why that happened. I mean, I fortunately had a ringside seat to it. We invested in FanDuel in 2011. It was 7 people. And Nigel pitched 76 funds and got 75 no's. Literally, 75 no's. But you know how hard it is to get 75 no's, just emotionally. And the reason was, it was known in the industry that there are no big exits in sports. It was a statement of religious belief that there are no exits in sports. And quite frankly, FanDuel and DraftKings, being the exits they were, changed this conventional wisdom. So during the course of my career, it has gone from an uninvestable category to a sexy and very exciting category.
Yeah, I mean, I think back to years ago, I helped out a company called Whoop. I'm guessing many people in this room
heard of it
or heard of it or wearing one. And same thing, we went to, I think, 200 accounts and basically got a zero. They got saved by, of all places, the World Expo in Dubai, giving them a $25 million check. I think the valuation was 65. And now that's a multi-billion dollar business, but no venture capitalists wanted to talk to them. And the world's obviously changed a lot now.
I also think something, when you think about the high level, what's going on in this market, I think it looks a lot like tech did in like the late 2000s, because tech investing was like this fragmented thing until you had platforms come in and stabilize the ecosystem. And by platforms, I mean like the App Store Amazon Web Services, Android, things like that, that made it easier to scale a startup. And once that stabilized the market, institutional capital flooded in, and it wasn't until after all of that that you had like Uber, Airbnb, and DoorDash built. I think we're at a similar time in sports and entertainment where it used to be this sort of like high net worth, hobbyist investor landscape, but now there's platforms that are allowing for scaled capital, and the platforms are different. It's like Netflix and YouTube that are writing 10-year multi-billion-dollar deals to big entertainment properties. It's social media, which is giving global distribution, which gives a bigger TAM for these entertainment properties. And it's the KKRs of the world that are facilitating sort of minority transactions and Arctos, folks like that. And so I think now we're going to see big infrastructure outcomes in betting and gaming and fan engagement in this market because it's more stable. It's set to scale.
And by the way, I want to double down on what Don said too. I think IRL is the ultimate AI hedge, right? At the end of the day, when you really look at all of the industries that are getting eaten by AI, it is very, very difficult to understand how a lot of IRL gets eaten by AI. Like when you hear about the software SaaS apocalypse, we've heard from a lot of the speakers, they're in the kill zone of what happens when you have automation. Well, you're in a live events business. You're in a viewership business. You're in a butts and seats business. Yes, you're going to have efficiencies because of AI, but AI doesn't replace us all sitting here in this room right now. And so we really are big believers in IRL.
Yeah, in fact, it creates more free time, which means people can go out and run 5Ks and 10Ks. Right?
That's right.
And so Ari Emanuel built a business called Mari. That's based on that premise. If you listen to Ari talk, he will say he sees a future where human beings just have more free time. And so they're going to live events because they want to be around people. It used to be the way you got human interaction was going to an office. If there's less of that, you need to find it elsewhere because we are social beings. And so that's the thesis that he has behind that, and we share in that. And that's why we think anything that's experiential going forward is going to be a big win.
Yeah, and I would double down on that too, because a lot of people, when sports were shifting from linear cable to like streamers, people were like, this is going to break the model. But really only like recently, over the last decade, the value of sports media rights just continue to go up and up. You don't watch Monday Night Football on Tuesday, right? And so I think that will continue to be super durable. And that's why I'm sure all three of us, I know we have already, are investing in new IP formats, new live entertainment formats. Don and I are invested into a business called Tomorrow Sports, or TGL, Tiger Woods and Rory McIlroy's new tech-enabled golf league. We at Will Ventures are also invested in a new global action sports league co-founded by Shaun White, the Olympic snowboarder and skateboarder, because we think there's room for more live content, and that will continue to be the dominant format for consumers.
Yeah, and by the way, we're in Raza. It's unannounced. If you guys know that, I actually just met the Mari guys. They're great. Really excited about that company as well. And it's weird because we're all sports, and I'm a classically trained computer geek, like, PhD dork, right? But the thing I'm most excited about are businesses that involve things like nightlife, because that's actually what we're all missing right now. And so it is funny how some of the data science people, if you go look at the white space on the board, it's some of the least tech-enabled part of it, and bringing technology stacks to some of these very legacy businesses that have been very poorly run for a long time is an area we're excited about too. All right, so let me switch gears and give the second question to the panel. We get asked this all the time, and I hate that I'm going to even bring this up, but I have to. It seems like prediction markets, they're the only thing anybody ever wants to talk about now in sports and gaming and gambling. And I kind of have this view right now that they're almost too big to fail. What are your guys' perspectives on them? Because I guarantee that this is probably the 5th time you got asked today.
Yeah, it's a pretty sore subject for me. Look, first I'll step back. The idea that we've gamified sports, whether that's fantasy football, March Madness coming up, obviously, that's good for engagement, right? And there's no denying that. And legalized sports betting or regulated sports betting has been a real boom for professional sports. But importantly, the way in which that developed here in North America was very focused on the safety of the consumer. The leagues were very involved from
Yes.
getting passport repealed to working with every state to make sure that there is real compliance around making sure kids aren't gambling, making sure they catch problem gamblers. What has happened now with the prediction market companies is they've come into the marketplace and rules be damned. And you know, you talk about FanDuel, the poor folks at FanDuel, DraftKings, MGM Resorts, Bet365, they've all done it the right way, right? They've all played by the rules. They have been thoughtful about consumers. And now they're having to compete with folks who aren't paying the same taxes. They don't have to deal with state laws. Their filings are different. And they're frankly at marketing in what I would say a very unsophisticated, frankly dangerous way. I saw an ad recently for Kalshi that said you can pay your rent by predicting the weather. That's ridiculous. Like that's absolutely ridiculous. And I think it's something that's got to be resolved. Now I will say this, their product is good. Right, so kudos to them for creating a good product, and we've seen all the betting companies have to chase to try and figure out a way to compete with them. But something's got to change because right now I don't like the way it's headed.
Yeah, I would say, I mean, I agree with everything that was just said, but I think there's also a big disconnect between the headlines for prediction markets and why most venture investors are putting capital behind them. Because right now, 90% of the volume on prediction markets, it's sports betting. And that's where all the headlines are going because that's what's getting like retail investors onto those platforms. But recently, these, you know, the two leaders, most people probably know, Kalshi, Polymarket, they're raising at like $5-10 billion valuations from firms like Founders Fund, Sequoia, Andreessen Horowitz, really sophisticated firms. Those investors are trying to deploy behind a 10x at least return. They're trying to return their funds through those investments. And so they've got to believe that those businesses could be worth $50-100 billion businesses. So they're not betting on those platforms to just be sports betting platforms. DraftKings today is like a $20 billion market cap, right? They're hoping those businesses could be the next New York Stock Exchange and do like hundreds of billions of dollars of volume. But sports betting is a great tip of the spear. So that's number one. I think there's some disconnect there from what's being covered. Second, it's very administration dependent. During the Biden administration, these prediction markets were like enemy number one. The Polymarket CEO had his house raided by the FBI. Now under the Trump administration, he's the youngest billionaire in the world, right? So that flipped. Who knows what's going to happen when administration changes again? So it's pretty hard to predict. But to Paul's point earlier, our viewpoint is it's kind of too big to ignore. I think you said too big to fail, TBD, but I think it's certainly too big to ignore. We think there's a high likelihood sports betting is rolled back for exactly the reasons that you say. I mean, Kalshi was literally running ads that were like, it's kind of addicting. Can you imagine DraftKings or FanDuel running that ad? But we think, right. So, but we think this market might be here to stay. And if it does, we're interested in two areas. One is more direct-to-consumer plays. So in the same way in sports betting, you had FanDuel, you had DraftKings, but then you had better interfaces for consumers. So think of folks like Underdog, folks like Prize Picks. Maybe you've seen their commercials. We think there will be more of those in the prediction market space, direct to consumer. I think the other area is business to business. So if you assume there will be many platforms in the way that there is Robinhood and Coinbase and Kalshi and Polymarket Fanatics all launching prediction markets, you'll probably need some infrastructure like trading tools, pricing, liquidity, like a middleware layer. And so we're interested in investing in businesses that do that too.
That's right. And the one thing I will say also on prediction markets is the dichotomy of sports versus non-sports. I think it's lost on both the market and legally. The places where it's sports, where it's a not known outcome event, right? Unless the game is fixed. Per that coach in Oregon for a minute who got arrested on opening day, unless that's happening, you don't know the outcome. But prediction markets allow you to take action on things that have known outcomes, like the Oscars. Somebody put the name of the winner in that envelope and literally knew who won before it was announced. People are taking action on when Iran is going to be invaded, right? There's somebody in the administration who actually knows the answer to that question. And so, in my opinion, that is actually going to be a place that there has to be a reckoning on, because in my opinion, that is a patently illegal product. Sports, does it have to get regulated? Do you have to pay the taxes? That's where 90% of the revenue. But I actually don't think that's what will lead to some sort of correction here. I think at some point people realizing you were on the other end of a rigged bet because the person making market literally is the person who said, let's go invade Iran. That's the kind of non-consumer protection that's really going to get somebody in trouble.
To me, it's just craziness. And you've got rampant insider trading going on. I just, I think back to the days of Napster. And at some point, like, the jig is up, and maybe it is too big to fail, but I just don't think a business can be constructed that is just flying in the face of all the things that we have spent so much time building rules around, safeguards around, without any kind of come-to-Jesus moment. And I feel like it's coming at some point.
And by the way, I have one funny story that he knows. I got to tell you this one. So this is all what's old, what's new again, too. Trade sports existed in 2003, 4, and 5. I was a market maker on trade sports. So prediction markets are not new. The connection to non-fiat currency is new, meaning all of the crypto. That's what made Kalshi and Polymarket. But these products all existed in the early 2000s. They all got shut down when all the poker sites got shut down on a thing called Black Friday. At that point in time, I was one of the largest market makers on trade sports, and the best trade I ever made, which I loved I get to tell this audience, I actually set line on who the new pope was going to be after John Paul died. And I knew that it was going to be Ratzinger because I had a guy in the Vatican who said, there is no question that this is the guy who's going to be because he's the spiritual follower, and he gave me in detail basically what I considered to be exactly what you said, complete inside information. I made 15 to 1 on that trade. Like, I'll never forget that. I was actually a pretty young kid at that time. I'm like, but this can't be good for society that I had a dude inside the Vatican who told me what the answer was going to be, and I was able to write market. That all got shut down. Literally, it was on a Black Friday. All those sites overnight got shut down. And by the way, you didn't get your money back. Not only that, the federal government seized the cash in accounts as opposed to let you get it back.
And people went to jail. I mean, full tilt guys. I mean,
by the way,
went to jail.
That's the most impressive connection ever. Like, that's the most. I got a Vatican guy.
Exactly. Yes.
Yeah, I got a Vatican guy. I got the insider.
I got Delco people. Let's just say I got Delco people.
No, I think also, like, this moment in time, it's an interesting opportunity for, like, newcomers to try and grab market share. There's, like, this innovator's dilemma, because if you're FanDuel, if you're DraftKings, one of these highly regulated books, you're not going to pivot to a prediction market. You could lose all your licenses.
Yes.
And so then that opens the path for Underdog and all of these, new businesses that are launching prediction markets. So it's really interesting to see how this is going to play out over the next 3-5 years.
All right, so we got 5 minutes. How about some questions from the audience? And as you see all three of us do what I'd say maybe a little bit different stuff than some of the other guys who've been up here. Go ahead.
A couple of you guys have mentioned youth sports. I'm probably not the only parent here who despises the privatization of youth sports. The cost, the expense, specialization year-round, cater to wealthy families. How do you feel funding all of that?
Yeah, I'm happy to jump. Yeah, I mean, as background, we are an investor in something called Unrivaled Sports, which is an owner of facilities in baseball and flag football and some other sports. That is a topic we spend a lot of time on in investment committee. It's something, I've got a 6-year-old. I experience it now, and it's something I thought a lot about. Here's the way I think about it. A few things. One is our capital comes in to help professionalize youth sports, so you as the consumer are getting value back, right? When we went out and did our research, we found that there were a lot of unhappy parents. They felt compelled to spend money, but they were unhappy with what they were getting. And the way in which we talk about it is, if you've got a 5-year-old or a 6-year-old, you're going to Disney and you're spending a lot of money, right? But when you see your kid with Mickey Mouse smiling, you kind of say to yourself, that's why I work hard, right? What we've created with Unrivaled is an experience that families can go enjoy, and we want to make sure that when they leave, they want to come back, that they've had a great experience. And it's our capital, it's the management team that we've hired that allows for that to be a good product. What makes you upset, and frankly me upset, is when I'm spending a lot of money and I got some 21-year-old coach who's 30 minutes late and they're not organized about when the game is, they're not thinking about kids' safety, and that's bothersome. So my view is we are helping to professionalize it. The other thing we're doing is, because we're coming in with capital and creating real cash flow businesses, we can be thoughtful about who gets to come, right? So it's not just about charging the top dollar. We can create platforms or tiers where we can bring in people who don't have the same amount of income. So we can subsidize in many ways. Up in Cooperstown, where we've got baseball, we have facilities that range from, call it a 4-star hotel, to something that's an awesome log cabin, right? So different types of families can come enjoy the experience with their families. That only happens when you've got real capital, real expertise around it. The other thing I would say, just on that point, and this was very important for us as a firm, is the more capital we have in, the more safety we can have for the kids, right? The most important thing is these kids have to be safe. And I'll give you a quick story. We were hosting a baseball tournament, and 2 coaches went out to a bar and got drunk. And they came back at midnight, took their clothes off, and started running around the bases. They got to second base before they were tackled, right? They got to second base, and security was there, tackled in. We have it all on video. This was on a Saturday night. I woke up Sunday morning at 6 a.m. My phone's blowing up. I saw the video. Immediately, we're able to send people to the kids' cabins to make sure that they were safe, and those 2 individuals were immediately arrested and put in jail. Our capital allowed that to happen, right? And I think that's something that's very important as we go down this youth trail. But it does make me nervous because I'm not sure everybody thinks the way we do, right? I think others may think differently, but it's a very important point and something that we spend a lot of time thinking about.
I love all that you just said, and access is really important to me. It's really important to our team. We have a lot of former athletes on our team. Youth sports provided a lot to me. I'm a first-generation college kid. My mom was a janitor. My pops was a handyman. It was sports and academics that got me to college and beyond. So access is so critical and important, and so the first principle for us is do no harm. So we're invested in 2 businesses in youth sports in particular that we're excited about. One is a business called Players Health. It's insurance technology, which is consolidating what has been a fragmented regional market. They're now the market leader, and they're offering lower premiums to youth sports programs, which is good for everybody. And best practices on how to keep kids safe. And the second business, Youth Inc., I mentioned, which is like a Fanatics for youth sports. Part of that business is content to commerce, right? So it's like we got the podcast over here on youth lacrosse, and then you can also buy spirit wear and equipment for your kid. I think importantly, on the commerce side, you got everything from like the $5 t-shirt to the expensive 3/4 zip. So make products available for everybody. And then on the media side, you're providing free education for parents in the ecosystem. So truly for us at the heart, what we don't want to do is increase the cost or lower access to anyone in this space, because that is something so core and important to everyone at our firm.
Great. Well, it says 30 seconds. All right, 30 seconds. Because he's a stickler, this
All
guy
right, yeah,
here.
no, that's fine. Paul, congrats on your 15-1 trade with the Vatican.
You like that?
Respectfully, I think Villanova took over that win this year.
That's what I'm saying. That's what I say. I love that I get to tell the story here.
Brian, this is actually a question for you. With the position that you have in Jump, how are you kind of attacking the high barrier to entry with price of tickets? I think sports has always been a nostalgic factor for a lot of people, attending sports with your mom or dad or brother or whatever. I think it's kind of been almost like only for the rich looking forward. How are you guys addressing that?
So true. It's like insane to go to Madison Square Garden. It's so hard to bring your family to like a Yankees game, a Knicks game. It's tough. And I think the biggest problem is that most of the big ticketing players have fundamentally misaligned incentives with first the core entertainment properties, but also fans, because they make most of their money off of secondary sales. And so to them, if secondary market is hot and they're selling for a lot of money, that's great. That's more revenue in their pocket. Really bad for consumers. By the way, entertainers and sports properties, they don't want that. They don't want it to be inaccessible for folks. What Jump does differently is they're actually taking lower fees on ticketing, because that's really just their wedge in. They've built a back-end data set so that if I'm Madison Square Garden, I know who my fan is. Today, Ticketmaster doesn't share that data with Madison Square Garden. They don't know that Brian went to 3 games. We should try to sell him a bundle of 5 tickets. We should try to get him to the Rangers game, sell him a jersey. Jump enables that. So they have all the data, and where they take less fees on ticketing, but more fees on concessions, on jerseys, so they make up for it in other ways, which is how you get at the high ticket problem.
Guys, I really appreciate you both being here, and I got to give a shout out to this guy. This guy did a hell of a job organizing it. Mr. Keating, really great job. Thank you for having us.